Okay, here we go. Okay, so welcome and thank you for joining me in this session of Oracle Applications Release 12 demo. And in today's agenda, I have the following with me. First, first is we'll have a highlight of what an e-business suite is all about. Then we'll be going through some of the business cycles, namely the procure to pay and the order to cash cycle. Then we look at some simple features of user creation, assignment of responsibilities, and then a high level sneak peek review of the individual products. Okay. So first of all, I would like to ask you, what is Oracle e-business suite?
It's more like an ERP where it's basically to it's another accounting or like a business software.
Okay. See, this terminology, right? E-business suite. This is a marketing and a packaging terminology. It's a very fancy terminology. It is used by Oracle from a marketing perspective. So whenever Oracle sells its products, right? What Oracle does is it creates products, it creates ERP software, and they sell it to their customers. So when they ship it to the customer, they sell it as a package. So this package is referred to as e-business suite. So this e-business suite contains different product families. Okay, you will have a CRM product family, you will have a financials product family, you will have HRMS product family, order management, procurement, inventory, and so on and so forth. Okay. Now, in short, you can assume that to be a box, a Pandora box. Are you able to see my diagram here?
Yeah.
Okay. So we have different verticals here. Okay. So each of these vertical, they represent one product family. So e-business suite encapsulates all these product families into it. So within each product family, we have individual products or modules. We will slice out the financials product family and take it out for discussion, because that's what we are going to learn. Okay? We'll be looking at the financials product family. No doubt an ERP has to be viewed in its entirety rather than being viewed in isolation. So we will definitely be viewing ERP in entirety, in the sense, when I say we'll be looking on the financials product family, that means we'll be focusing more on the financials product family, but it is inevitable that we will have to look at the integration with other product families also. To give you an example, we have something called as an inventory product family, within which items are getting created. Okay, for these items you have purchase order. Okay, a purchase order gets created for an item which is created in inventory. Please note, these two are different product families. Okay, and this purchase order gets invoiced in finance and payables. So there are integrations not only for the modules within a product family, but there are integrations across product families. So you have financial and non-financial integrations also. So we will have to take care of all these integrations, and we'll have to view it as an entire cycle. So now we come to the concept of business cycle. Are you aware of, so in short, when you say e-business suite, right, so whenever you log in into the Oracle application, this is what you find. Are you able to see this e-business suite on the header? So this is what you find. So this is an e-business suite. It comes with all these packages. Okay. All these are different modules. So now that takes us, we were referring to the integration across product families, right? The reason why we need to focus on the integration across product families is because we will have to consider the entire business cycle rather than looking at individual modules, because the heart of an ERP is basically integration, right? When compared to other standalone package like Tally or QuickBooks, when we say ERP means basically any ERP software, Oracle, SAP, or whatever, it has to satisfy two business cycles. They are the procure to pay business cycle and the order to cash business cycle. Do you have any idea of this business cycles?
Business cycles, yeah.
Like what is procure to pay and what is order to cash?
Um, this is basically like, from the,
You don't mind, right? Me asking you questions, you don't mind, right?
yeah, I mean, basically, I know that, but the reason is that I'm like, wow, now I'm like just put back into my concepts again.
Okay.
Um, Basically, this business cycle is basically from the time of procurement to the time of final payment, right?
Perfect.
It's like how to, like the ordering and then goes through all the modules of purchase payables, and it's basically the cycle of, from the time of point of ordering to the point of payment.
Correct. In short, we have on the left hand side that is nothing but the purchase cycle, and on the right
Uh-huh.
hand side is nothing but the sales cycle.
Sales cycle, yeah.
Okay. So when we say purchase cycle, you initially place a purchase order, then you receive the goods, you
Yeah.
receive the invoice from the supplier which has to be invoiced, then you'll have to
Uh-huh.
make the payment for the liability that has been recognized, right? So
Yeah.
this covers your procure to pay. On the sales side, it's basically you receive an inquiry from the customer, then you
Mm-hmm.
raise an order, you book that order,
Okay.
you ship the goods to the customer, and
Mm-hmm.
you trace him and you collect the payment, right? So that is the
Yeah.
sales cycle. Now
Mm-hmm.
let's go a bit in depth in this procure to pay cycle. This is what a high level overview of what a procure to pay cycle is. Okay.
Mm-hmm.
Now this can be better explained using a manufacturing example. Let us assume Toyota. Toyota
Okay.
manufactures cars. Okay.
Mm-hmm.
Now, if there is a shortage in the Toyota's production department for engine parts, what the production department will do is this production department will raise a requisition to the
Mm-hmm.
purchase department. It is an internal requisition from the production department to the purchase department, wherein the Toyota's production department will say, I require, say, 10 engine parts of this specification.
Mm-hmm.
Now, this purchase department, after having received the requisition, its job is to purchase the goods which are required in the production floor. So what the purchase department will do is, purchase department will have with itself list of suppliers. They are called as, in ERP terminology, they are called as approved supplier list, ASL. Okay, it will have
Okay.
list of suppliers who
Mm-hmm.
supply the required material. So it will open the supplier register and it will
Mm-hmm.
see which suppliers supply this particular specific engine part. Let's say there are three suppliers, supplier A, supplier B and supplier C. Now
Mm-hmm.
purchase department will send a request for quotation. What
Mm-hmm.
it will contain the details regarding the number of items required and the specification. It will ask you, please send us your quotations for such item and this configuration. So the supplier, all the three suppliers will receive the request for quotation and all
Mm-hmm.
these three suppliers will send their quotes to the purchase department. So that is this arrow, it is coming back. Okay. So having received the quote, now it's the job of the purchase department to analyze and to select the best quotation.
Quotation.
So let's say we have received quotation from A, B and C. If there are various factors based on which the analysis is done and the quotation is selected. It can be either the quality or it can be the payment terms or a number of reasons. Okay. Now after
Mm-hmm.
having selected one quotation, let's say you have shortlisted supplier B. Now
Mm-hmm.
the next job is to for the purchase department to generate or raise a purchase order and send it to the supplier. So this purchase order is an agreement between the operating unit. I will be using the term operating unit, okay,
Mm-hmm.
which is nothing but the Toyota industry where the parts are required to be procured. Okay,
Okay.
so this is purchase order is an agreement between the Toyota and supplier B for purchase of say 10 units of engine parts at so and so price. Got it?
Okay.
So now the supplier will receive the purchase order and supplier B is happy. So after having received the purchase order, supplier B will send the goods to the factory warehouse. Correct? The factory gate. So after having received the goods to the factory gate, you will transfer these goods to the warehouse, and from warehouse they will get transferred to the production department. That's a different concept. Now in the meanwhile, the supplier will send an invoice. Please note, invoice is a third party document which we receive from the supplier. We don't generate invoice in our system. We merely record it in our application. Okay. But in the case of purchase order, we generate it in our system and we push it across to the supplier. But in the case of invoice, it is a third party document. You see this in green color. So you receive it from the supplier. Okay, it's a third party document. So when you receive it from the supplier, you record it in your application. So the moment you record it into in the application, this invoice becomes a contractual agreement, a contract. The agreement which was initially created by a purchase order becomes a contract when you record the invoice in the application, and a liability gets put against the supplier and you end up paying the supplier. So this is what a procure to pay cycle is all about. Any doubts so far? You have any doubts in this procure to pay cycle?
No, I'm fine with this. Yeah.
Okay. Now, in short, you have a requisition, then based on which purchase order is raised, you receive the goods, invoicing, then issue of checks. Okay.
Okay.
Now, on the sales side, we have this order to cash cycle. It's very simple cycle. Like you receive an inquiry from the customer. On receipt of this inquiry, what do? You send the quotation to the customer. Then the customer will send you a purchase order. Correct? So when you record that purchase order in your system, it will become a sale order.
Yeah.
So you book that sale order, then there's a facility for you to pick the goods from the warehouse. There are lot of concepts in picking from warehouse. Let's say it's an individual item. It's a simple, you just go and you pick it. Or else if it's an assembled item, you will have to pick and assemble. So there are various concepts which you look into detail when we come to the order to cash cycle practicals. But currently, after booking the order, next step is to pick and then ship it to the customer. So once you ship it, you will have to make him liable. So you bill the customer and you receive the payment. Okay?
Yeah.
So please note, in all these examples that we discussed, right, the procure to pay and order to cash, there are different departments which perform different jobs. Correct?
Yeah.
So these departments are what being called as responsibilities in Oracle applications. Purchasing department is called as purchasing responsibility. Payables department is called as payables responsibility. Payments department is called as payments responsibility. Now, who should be given access to which responsibility? Let's say in this case, a purchasing user who raises purchase order should be given access to purchasing responsibility. It's not required for this user to be given access to payments responsibility, nor to be given access to payments responsibility, because if we give one user access to all these three, then there are greater chances of fraud. Correct? If the same user raises the purchase order, if he bills and if makes the payment, then there can be greater chance of frauds in the system. So, a system administrator is responsible for creating user sign-ons and assigning them to one or more responsibilities. Okay? So, like let's say we have three users, Mark, Lee, Bruce, and Satya. So he can segregate and he can create user sign-ons. Okay. And how is this done? This is done using system administrator responsibility. Let me just open the application and show you. I will give you access to this. Let's see. Username is SK Satyakumar 1116 and password is 1116 SK. Okay.
Okay.
Okay. Now SK 1116 SK. So when I log into the application, this is the e-business suite, and I'm going straight to the system administrator. SIST. Okay. In system administrator, I'll give you the clear-cut navigation and the things. You don't bother. Just get the concepts clear now. Okay. You have a facility to create a user. See, this one is a OA page. You're aware, right? OA HTML page, and this one is a Java form. So till 11i, there were only Java forms. They didn't have OA pages. From release 12, you have OA pages and Java forms. Okay.
Oh, okay.
So when you go to Fusion, you don't have any Java forms. You only have OA pages. Okay. Are you able to see this user form? Okay.
Yeah.
See, let me say Lakshmi. Password welcome 123. Welcome 123 about. Okay. The ones in yellow are mandatory. The ones in white are optional.
Oh, okay.
Let me click on the responsibility. Payables. Vision operations is the operating unit that we'll be using. Okay, I'll come to the concept of operating unit and legal entity. What else? Let me keep you save. So I created, as a system administrator, I created a user sign-on with two responsibilities. Okay. So I will close this one. I will close. So let me log in again. Lakshmi, welcome 123. Login. It will ask you for a current password and the change of new password. Welcome 123. Welcome. Okay. So now you can see Lakshmi. This application diagnostics, it comes by default. Okay. Don't worry about this one. So you can see when these login credentials are given to the user Lakshmi has access to these two responsibilities which are granted by the system administrator. Clear?
Okay.
That was regarding users and responsibilities. Now coming into legal entity and operating unit. You have any idea of what a legal entity is and what an operating unit is?
Legal entity is basically the organization that we are, basically the organization with all the other, what do you say, the system in place. Basically, like you have your tax. I'm reading what you've done there, but I do understand it though. I mean, you can just go on, just explain it to me. I would.
Right. See, okay. You are aware of a showroom called as Bata in India? You're aware, right? So see, Bata, they sell shoes and slippers and all the footwear, right? So they have their retail outlet across India. They have it in Chennai, they have it in Hyderabad, they have it in Delhi, Mumbai, all places. Okay. Now, these are all retail outlets. So where you go and purchase footwear. Now let's say you want to sue Bata. Okay, you want to file a case against Bata. You cannot file a case. Let's say you have purchased a footwear from Chennai. So you cannot file a case against the showroom from where you have purchased the footwear. You will have to file a case against the registered office, head office, which is in Delhi. Because that head office in Delhi is the legal entity. It is a legal representation of Bata. Okay. The rest units from where day-to-day purchase and sale take place, they are all merely operating units. Okay. So a legal entity is responsible for all the legal compliances, namely the tax compliance, and whatever the legal compliance that comes, they are responsible for keeping the bank accounts. They own the bank account. When you go to a bank and a company opens a bank account, it's always in the name of legal entity, not the operating unit. Okay. So one legal entity can have multiple operating units. Okay. Like one Bata India can have operating units across India from where they sell their products. So the relationship between a legal entity and an operating unit is 1:n. Got it? Any doubts?
What is 1:n?
For one legal entity, there can be n number of operating units.
N number of, okay, fine, yeah.
Okay, n means number of, okay?
Okay, fine.
So, and these operating units can be either classified based on the location or based on the nature of operation.
Okay.
Here we have a hypothetical example wherein Dell Limited USA is a legal entity which has 4 operating units, one in India and one in China. They have 2 sales outlets, one in India and one in China, and within USA they have a consultancy service and a chip manufacturing unit. Okay. So based on geography, the India and the China outlet, they can be classified as operating unit based on the geography, and based on the nature of business, the chip manufacturing unit and the consultancy service can be classified as an operating unit. So it's all up to the legal entity's convenience to classify operating unit. Okay?
Okay, yeah.
Now this is just a listing of the products in release 12. On the left hand we have products which were existing in the prior release of 11i and which continue to exist in release 12. Okay?
Oh, okay.
And here we have exclusive release 12 initiatives. They were not earlier available in 11i. So we have AP, AR, FA. You have heard of these products, like?
Yeah.
Okay. Then you have heard of these things?
No, I've not really got into this yet. Release 12, I've not really known much of what are the changes. And
Okay. So, one thing to be noted is cash management is CE. Okay? E-business tax is ZX. Legal entity is XLE. Oracle payments is IBY. The reason why this is not CM, why this is not OP, why this is not EB is because Oracle uses acronym and not the short definition. So what is the difference between an acronym and a short definition? You have an idea of what an acronym is and what a short definition is. So an acronym need not represent the long definition, but a short definition should necessarily represent a long definition. If this is short definition, then this should be CM.
Oh, okay.
Okay. So Oracle uses acronym for representing their modules and not the short definition.
Okay.
This is just another matrix way of representing the same information. Okay. So can we proceed and go to the individual products overview?
Yeah.
So we'll take up AP first. Okay.
Okay.
What do we do in payables? The majority, yeah.
I'm sorry to stop you. Is it that Oracle Financials just has the AR, AP, and GL? That's the whole thing?
No, this is the whole thing. Oracle Financials product listing. AP, AR, FA, GL, cash management.
Yes, it's okay.
Subledger accounting, Oracle payments, CVS tax, legal entity, all are part of financials family.
Okay.
Okay, this is the entire financials package I am showing you. So we'll be dealing with these things.
Oh, okay. Fine.
Okay. Coming to AP. Now, what does AP do generally? First is we raise an invoice and book the liability against the supplier, right? Then, based on payment terms are terms of payment between the supplier and the operating unit, right? So, based on that, it calculates discount and interest. Then, we have a concept of PO invoice matching. You heard of this PO invoice matching earlier?
This is basically like, this is between the legal entity and the operating units? Or are we dealing with the outsiders here?
Please do not bring legal entity into picture because
okay, fine.
Whatever transactions take place, right? Payables, receivables, all these transactions, they take place at operating unit level. They do not take place at legal entity level. Legal entity is at the higher level. So whenever we say we want to purchase good or we want to sell goods, right? We'll always refer to an operating unit. We'll not refer to a legal entity.
Okay, fine.
Okay. So when I say PO and invoice matching, see it's like this. In the Procure to Pay we saw that's a purchasing department and that's a payables department, right? So the person who is entering the PO is different from the person who is recording the invoice. So let's say at the time of PO you had requested for 10 units of parts at 100 per unit. Okay. Now at the time of invoicing, if the supplier has sent you an invoice for say 120 units at 120 per, okay, let me open an Excel. Okay, see at the time of purchase order, we have a quantity and we had a rate per unit. Okay, let's say you had asked for 100 units of a particular engine part at 10 per unit. Now, this is what has been done in the purchase department. At the time of billing, the supplier has sent you the bill as 120 into 12. The person who is entering the invoice is different from the person who has raised the PO, correct?
Yeah.
So we have a concept of matching, and what happens in this matching is you try to match the PO quantity and the invoice quantity, and you try to match the PO price and invoice price. And whenever there are variances, that means difference from whatever has been set as standard, there are certain error messages which get cropped up, by which an user is made aware that he is supposed to go back and verify the information in detail. Okay, so That point of time, what happens is it will place the invoice on a hold. When you say an invoice is put on a hold, that means you cannot pay an invoice. Okay, so it will not allow you to make a payment against this invoice which has not matched to the purchase order. So we have a concept of PO invoice matching. This is an area wherein you integrate with purchasing, because purchase orders are created in purchasing responsibility when invoice is in payables. Okay.
Okay.
So this is covered in accounts payable, PO invoice matching. Then we have integration for accounting via SLA. Now, what is SLA? All these things will come to the subsequent slide. But currently, please note, in release 12, the accounting aspect is being governed by subledger accounting, a new feature introduced in release 12, and not by general ledger. Okay.
Oh, okay.
Then we have facility to raise debit memo or a credit memo. You are aware of what a debit or a credit memo is?
Yeah.
Okay. So these are basically whenever there are rejections or returns, you raise certain debit memo or credit memo. These are considered as supplementary invoices. They are stapled along with the original invoice and they are recorded as a correction to the original invoice. Okay.
Yeah.
Then you can maintain the supplier balance, you can enter invoice in batches, you can make a payment against the invoice, then you can adjust the invoice for any corrections. So these are all part of payables functionality. So this is just what an invoice will come to this. This is very basic. What an invoice is. Invoice just contains an itemized list of goods which have been shipped, and it also contains the cost details. Okay. Payment terms. You are aware of these payment terms, right? 2 by 10 net 30.
Yeah.
Okay. Fine. Yeah, this is sort of worth discussing. We have payables integration with other products. As I was mentioning earlier, it's not only the integration within a product family that has to be considered. We also have to consider integration with other product families. Okay. We have something called the TCA, which is Trading Community Architecture, which contains all the external party information, namely all the information regarding the suppliers and suppliers addresses. Okay, so we have the TCA, then we have subledger accounting, which takes care of the accounting. It's centralized accounting engine. Then we have integration with cash management. We have integration with payments, with taxation, with purchase order. I was referring to the matching concept, right? So that is taken care here. Then we have integration with assets, wherein a capital purchase invoice automatically gets converted to a fixed asset. Then we have something for an iSupplier portal. What an iSupplier portal is, it's basically an interactive application with the supplier and the operating unit. So the suppliers can log in and they can see what is the status of their order. Okay. Let's say the supplier has sent you goods for 10 units and you have paid for 5 units. So supplier can view what is the billing information, how much has been settled, and what is his status. It's basically like how you log in and you can make the payment, right? From a customer perspective. Similarly, the supplier is given access to the operating unit's information, wherein he is given access to a portal. He logs in and he can view the status of his order. He can also view the status of his payments and invoices.
Okay.
Then interaction with the general ledger, then approval management engine. That is as far as the payables are concerned. Now moving over to the fixed assets, you know what a fixed asset is, right? So the current assets, namely the stock in trade, they are being handled in inventory module. Okay. So assets module takes care of long-term tangible fixed assets. So we have addition, we have depreciation. You calculate gain or loss on sale, you transfer the asset. Then we have two books, one is corporate book and one is tax book, because the rates of depreciation,
they are different.
Right, the rates of depreciation for corporate book differs from the tax laws. So we have two different books. Then we have a major versus minor category. You are aware of this, what this category is, major and minor category?
No.
Okay.
I'm not familiar.
Okay, it's a very simple concept. Basically, in Oracle apps, we have a concept of classifying assets of similar nature into one category. because we assume that they have a same or a similar or a uniform depreciation rate. Let's say we have a major category called as land and building. Within that, you can have minor categories: factory building, office building, etc. If you have major category of plant and machinery, you can have engine, oil extraction machinery, etc. So because we know the depreciation for land and building is quite different from that of electrical equipments. So
Yeah.
we just categorize it based on a depreciation rates of the other similar characteristics. Okay.
Also, the major is basically the broader names that you give, where the others get grouped into that.
Yes. In a
The
major, it's
ones that are
basically yeah.
yeah, like under land and building, these get, how you going to identify which groups fall under what.
Yeah, you are aware of Schedule 6 Part 1?
Yeah, where I think please go with it.
Yeah. So in Schedule 6 Part 1, we have this categorization of assets, right? The header. So that
Yeah,
is nothing but the major. We have land and building, plant and machinery,
yeah,
electricals.
yeah. Okay,
Within that individual, you can have different small assets, small categories. They are minor categories.
okay,
Within minor categories, you will have assets.
okay,
See,
fine.
electrical, within air conditioner, you will have, say, air conditioner 1, 2, 3 or 4. Within lights
Okay,
and fittings, you will have lights, bulbs, choke, whatever it is.
okay,
This is basically a screenshot of the asset workbench. Okay, where or nothing but an asset register.
oh, okay.
Okay, this is an important concept in release 12.
Mm-hmm.
In R12, bank accounts has been classified into two.
Okay,
Please note I am referring to bank accounts. You don't write down anything because I'll send you the PPT, okay? Don't waste your
okay,
time writing down.
okay. I've been writing also. Okay,
No, you did not write down anything because I'm going to send you the recording and I'm also going to send you the PPT. Just a waste of
okay,
time. Okay, so
okay,
very bad habit right from the CA we start writing. So, uh, so we have an internal bank account and we have external bank accounts. So what
okay.
internal bank accounts are basically the accounts which are owned by operating unit and
Mm-hmm.
from which you make payment to your supplier for the goods purchased, or the account in which you deposit the money that you collect from your customers.
Okay.
Now external bank accounts are accounts of the external parties,
Mm-hmm.
namely the customers and suppliers. Okay, to give you further an example, this is what. Say let's say you make payment using an ICICI account and the
Mm-hmm.
supplier receives it in his HDFC account. Okay.
Okay.
So in this
Mm-hmm.
case, what is an internal bank account? What is an external bank account? Can you tell me?
So the internal would be ICICI and external would be HDFC.
Correct. Because this is the account from which funds are getting disbursed, right?
Yeah.
And this is the account to which the funds are getting disbursed.
Yeah.
So this is supplier bank account. Now in this case, can you tell me what is the external, what is the internal bank account? You receive a payment from a customer and you deposit in Axis account.
So that is internal.
Yeah, the account to which the funds are deposited is internal bank
Yeah.
account. Okay. Now, internal bank accounts are owned by responsibility in cash management.
Uh-huh.
So this is just a screenshot of that. You find right, manage bank accounts,
Uh-huh.
country, bank, branch,
Mm-hmm.
and bank account owners vision operation. Okay.
Okay.
Okay. Coming to subledger accounting. What is subledger accounting? This is an exclusive release tool initiative.
Mm-hmm.
So, accounting was governed by general ledger in prior release, but in R12 they have
Mm-hmm.
introduced a central accounting engine called as subledger accounting. So whenever a transaction takes place in AR or whenever an invoice gets created in AP, and when accounting has to take place for this particular transaction, it is through subledger accounting, the central engine through which a transaction takes place. So there are rules defined in subledger accounting. Let's say you have an invoice that gets validated. So quite naturally, as per the rules defined in subledger accounting, the supplier accounts get credited and the item accounts get debited. So all this accounting entry is rule based. Okay, we have various rules that are inbuilt in subledger accounting, based on which accounting takes place. Okay, and it contains a granular level of accounting information, a very detailed level of which account code against which cost center. All this information can be tracked in subledger accounting.
Oh, okay.
Yeah. Basically, it forms a link between the transaction and the general ledger. So this is how the architecture is in at least 12. You have individual pay modules like payables, receivables, and accounting takes place through subledger accounting. After the accounting is done, okay, after the accounting entry gets generated, this accounting entry is posted to general ledger, from where the balance sheet and profit loss account is prepared.
Okay, so can I stop you here for a minute?
Yeah, please.
So you're saying this subledger accounting is where all my basic entries of the debit credit goes, and to the GL I'll take the grand totals basically?
See, what subledger accounting does is, it merely processes the accounting. Accounting is processed. So after processing, it does not retain with itself. It pushes the entry to general ledger.
So basically you will have a duplication, or is it a different, how do you see it in the GL then?
See, if an invoice gets created in payables, okay? So you will have one debit account and one credit account, correct?
Yeah.
Item is debited, liability is credited.
Yeah.
This liability should get recognized in trial balance. This item should get recognized in trial balance, correct?
Yeah.
How does it get recognized? So, a trial balance is drawn from general ledger. General ledger is here. Okay? General ledger is here. Payables is here. Now, whenever payables clicks on create accounting, what that create accounting program does is, it will directly go to subledger accounting, and in subledger accounting it will search. They have various combinations by which they search. If the event is invoice creation, then the entry should be item account debit to liability account. First it will see what is the event. Event is invoice creation, correct? Now for this event it will find out what is the accounting entry. It will pick up what is the debit account, it will also pick up the credit account. All this is done in subledger accounting. After having picked up the debit account and credit account, it will generate an accounting entry. Okay. And it will see what is the account code for a debit and what is the account code for a credit.
Okay.
So it will pick up what is the debit, what is the credit, what is the account code for debit, what is the account code for credit, and it will pick up the amount from the invoice. After processing all this, see, this is all processing, right? So once you process this accounting entry, when an accounting entry is successfully generated, it will post this accounting entry to general ledger. It will not retain with itself.
Oh, okay. Now I get it. Okay. So basically it just processes the same, like earlier it would be all in the GL. Now it's going through another, there is another medium through which it goes into the GL straight.
Right. There is a centralized accounting model through which it gets processed and it gets sent to the general ledger.
Oh, okay. So the earlier versions were all done in the GL directly, right?
Right.
Okay.
So to that extent, the role of GL has got reduced.
So how does that, I mean, I'm just curious that what is the,
need.
Yeah.
What is the need to create subledger accounting?
Yeah.
Right?
Yeah.
See, in the earlier release, it was only the individual products and GL, correct?
Uh-huh.
So whenever there were any issues in accounting, you had to switch back and forth with individual products and GL, and you did not know where the issue was occurring. Whether it is because the products did not send across or populate the relevant information, or whether GL
Uh-huh.
did not process it properly, and GL was getting more and more complicated. So they felt the need for a centralized repository. So from now onwards, if there is any issue in accounting, you will directly go to SLA and refer the rules.
Oh, okay.
You will not be going to different product modules and all.
Oh, okay. Fine. I get it. Okay.
Just a way of streamlining processes, that's all.
Okay.
Okay, and subledger accounting is represented by something called as a SLAM, subledger accounting method. Okay, we'll come to that in detail later.
Okay.
Okay. Then coming to accounts receivable.
Mm-hmm.
In accounts receivable, it's basically a part of the sales cycle
Mm-hmm.
wherein you create a transaction. What is the transaction? Whenever you say,
Basically,
yeah,
yeah. Go ahead. Go ahead.
yeah, please go ahead.
No. You continue. I want to just sometimes I'm just too jumpy, but I know this or
Yeah, no, if you know that it's better, right? So that we
no.
can
I
slide
want
in.
it's good to learn, relearn, or it's just refreshing my back into the CPA mode.
Okay, fine. When did you do a CPA recently or long time before?
Yeah, I just finished it in 2008, and I was working also with a CPA firm for some time.
Okay, fine. The four papers, right, in CPA? Four or how many papers are there?
4 papers.
Okay, fine. So we have in the civils, you have a transaction, basically nothing but a sale invoice,
Mm-hmm.
then a receipt. Let's say you receive a check from a customer, so you create a receipt for that, right?
Mm-hmm.
So that's a receipt. Then when you remit it, you have remittances, and they get cleared from your bank account. This is the manual process. Then you also have automatic receipts. You know what automatic receipts are?
Auto receipts. No. Is it like it generates it, or I'm not sure what? I'm not
Okay.
familiar with this.
What auto receipt means is, see, nowadays no one really uses check or cash for making payment. Everyone use credit card and bank account transfers,
Yeah.
right? So we have a facility called as auto receipts, automatic receipts,
Oh,
which
okay.
collect the money using credit card and bank account transfer. Okay.
Oh, so basically it's more to do with the transfers and credit.
Online.
Oh, okay.
So auto receipts is very tightly integrated with iPayments,
Oh,
online payments.
okay.
Okay. Now then we have a debit or credit memo, the same concept whenever returns or rejections.
Yeah. Huh?
Then APR netting. Any idea about this one? APR netting?
So basically it will, like kind of it squares up the accounts,
Yes.
kind of. So the actual picture is like whether what is paid and what is
If the same customer is also a
still,
supplier,
yeah,
then you net off and you make a final
yeah,
payment or you set it off and you get a
okay,
final receipt.
yeah.
You have heard of MOAC, multi-org access control?
No.
Okay. Uh, multi-org access control, it's basically a server-side enhancement wherein we give access for one user to multiple operating units. Okay.
Okay.
So the same user can enter invoices for, say, Vision Operations, Vision USA, Vision India, Vision Japan. Okay.
Mm-hmm.
So that has undergone some changes in release 12 when compared to 11.9.
Oh, okay.
What are this? In 11i, it was like this. We had operating units, okay,
Mm-hmm.
and we had responsibilities tied to this operating unit.
Mm-hmm.
So let's say you have a Belgium. Let us take a payables clerk who enters invoice. Okay, so
Mm-hmm.
let's say he has access to three operating units: Belgium, Holland, and Denmark. So his job
Mm-hmm.
is to enter invoices.
Mm-hmm.
So he gets the first invoice and he enters the first invoice. Let's say the invoice is for Belgium operating unit. So he enters the invoice for Belgium operating unit. Now let's
Mm-hmm.
say the second invoice turns out to be from Holland operating unit.
Mm-hmm.
Okay. So what this user has to do is he has to log out of Belgium operating unit and he has
Mm-hmm.
to log into the Holland operating unit and enter the Holland invoice. Okay.
Mm-hmm.
Now, let's say the third invoice he picks up is from the Denmark operating unit. So he will have to log out of Holland and log into the Denmark. So
Mm-hmm.
this way, for changing the operating unit, he has to log out and log in every time. Okay,
Mm-hmm.
this is the scenario in 11i.
Mm-hmm.
He was given access to three operating units. He was not denied, but the access was in a very inconvenient form. Agreed?
Mm-hmm.
In release 12, what change is they have brought about a single responsibility.
Mm-hmm.
So he need not log out and log in every time, but
Mm-hmm.
within the same responsibility, he can select different operating units. Okay?
Okay. Mm-hmm.
So it's like this. Are you able to see this one? See, in the drop
Yeah.
down, the first field is operating unit field. So you can select which operating unit he wants and automatically he can keep entering the invoice in the invoice load page
Oh, okay.
rather than logging out and logging in.
Okay.
Okay, this is called multi-org access control, access to multiple operating units.
Oh, okay.
EB tax. Now, what is EB tax? EB tax is again an exclusive release 12 initiative.
Mm-hmm.
This is a central application that manages the tax data. Okay, and we deal with transaction tax. We don't deal with income tax, wealth tax. We only deal with sales tax, VAT, excise duty. Okay,
So
we
no
deal,
personal taxes, you mean?
perfect. No personal taxes.
Yeah.
Only transaction taxes.
Okay.
Taxes on business transaction.
Business taxes. Okay.
Okay, so we have something called as a regime to rate setup. So this is a new feature that has been created, incorporated in release 12,
Uh-huh.
wherein you have various tax rules. So
Mm-hmm.
you can, there are a lot of configurations possible. So we'll go to this detail. We need at least 5 sessions to learn about EV tax. Okay. So
Okay.
tax, you have a recoverable tax, how to create a recoverable tax, how to create a non-recoverable tax, how to create an exclusive tax, inclusive tax. So all these things will be learning in detail. Okay. In
Okay.
a business taxation. So what you have to
Mm-hmm.
understand is similar to subledger accounting, this is centralized tax engine.
Mm-hmm.
But SLA was for accounting, EB tax is for taxation. So payables,
Mm-hmm.
receivables, they make use of e-business tax to calculate the tax in their invoice of the transaction. Okay.
Okay.
Coming to general ledger. General ledger has, like, there are, after introduction of subledger accounting, the role of general ledger has got reduced to that extent. So it is final repository of accounting data, and from general ledger you prepare your trial balance, you prepare a profit loss account, and you prepare your balance sheet.
Mm-hmm.
And a ledger is mapped to legal entity. Okay, see,
Okay.
it is like this. Let's say we have a legal entity with just 3 operating units. Okay, in 11i, you had a concept of set of books, SOB. Okay, so in 11i, each operating unit had a set of books, SOB1, SOB2, SOB3. Okay, so if you had to like open and close periods, okay, year-end processing, everything has to be done 3 times, right? Because we have 3 set of books. But now this concept is done away. You no longer have the set of books. Instead, you have something called as a ledger, and this ledger is at legal entity level here. So when you map a ledger to legal entity, quite naturally this ledger will percolate down to all the operating units within that legal entity.
Okay.
Okay. So it is like a centralized processing and very easy to access multiple accounts for different operating units using a single ledger. So if you close this ledger, automatically the books are closed for all the 3 operating units.
All the 3, okay.
So that's one thing about ledger, and this is one area wherein we have something called as an accounting setup manager, which is a one-stop point for creating accounting. Let me just take you through that. Okay. Okay, you see this, right? This is called as accounting setup manager. Okay, this is a one-stop point wherein you create your accounting configuration. You map your legal entity here and your ledger. And in ledger we have various concepts, like we have a primary ledger, we have a secondary ledger, and we have a reporting currency ledger. Just to give you a gist of it, ledger comprises of 4 C's. Okay, you are aware of 4 C's of you are aware of C's in set of books?
C's.
Okay, so you have a current, whenever any accounting entry takes place, right, it will be like this. Say item account debit, liability account credit, correct? And this will be for, let's say, 1st of April. Okay, and this will quite naturally be for a currency. This will be for some account code, 1210 account code, right? So you have a calendar that is nothing but the date. You have a currency, and you have chart of account. Okay, 1210. So these are all C's which are required for creating an accounting entry. In addition to this, you have one other C which has been, these are all C's which existed in 11i. Okay.
Oh, okay.
And they continue to exist in release 12. Okay. But only thing is, in release 12, you have an extra C that is nothing but convention. Okay. What is this convention? Convention is also called as SLAM. Subledger accounting method.
Oh, okay.
So let's say you have a company in US and you also have an operation in India. Okay. And this US company, it has, let's say it has branches in US, legal entities US, it has branches US, India and Europe. Okay. Now, let's say in US, it has USD as the currency. Calendar is from Jan to December. Okay. Chart of accounts, let's say it is having US chart of accounts. With chart of accounts, I mean the account codes. Okay.
Okay.
And it has convention is US GAAP. Okay. So based on this, the accounting is being maintained at the US company. For India, since the transactions are in INR, it is just a branch. I have where did it go? It is just a branch. So I have the currency is INR, but I follow these principles.
Okay.
Possible it's a US company only, right? I just want a different representation of transactions. Okay. But in Euro, I want Euro currency. Let's say this is same. Okay, this one Jan to December. I have the same chart of accounts, but I want the accounting as per IFRS. Okay, so to cater to these kind of changing needs, right? We have a primary ledger, we have a reporting currency ledger, and we have a secondary ledger. Okay, so all these transactions will be in primary ledger. Now if I want a reporting currency, if only currency is different, then I'll have a reporting currency ledger. But if total accounting convention itself is different, okay, then I will have a secondary ledger. So we'll come to the details as to what is a primary ledger, what is a secondary ledger, what's a report. All these are all new features which have been introduced in release 12. Okay, so that is what, if you see here, you will find reporting currencies, secondary ledger. Okay, so all these features have been introduced in release 12.
Oh, okay.
In general ledger. What else? Yes, that's all I had for the demo session. You have any questions, doubts, clarifications?
So far, it's been pretty clear for me.
Okay.